Hello guys, it's Sam here with Investing with Sam. Today I'm going to be bringing you a different type of a video. Today normally I'll be doing videos on companies and talking about their share price and how the stocks may be reacted over the last week or so or last month, and if there's any news on the company. But today I'm bringing you a different type of video. I'm bringing you a type of video where I'm providing you quotes from a book that I'm reading, which is One Up on Wall Street by Peter Lynch with John Rothschild. If you don't know who Peter Lynch is, he managed Fidelity for a couple years, and he's probably, in my thoughts anyway, he's probably the top 10 investors in the world. He's probably on Warren Buffett's level. I've watched a lot of videos of him in the past. The person that recommended me this book is a YouTuber. He didn't actually tell me, but he said in his video that he obviously read the book himself. Um, and obviously, I've taken his advice and I've obviously started reading this book, which I think is a great book. I've only been reading it for about a month now. I'm about a quarter into the book, and basically, from what I've read so far, it's basically talking about the experiences he's had, and he basically explains that anyone can be invested in the stock market. You don't have to have you know a lot of education, work at the best hedge funds to be the best. Obviously, invest in the stock market. You could literally be anyone that works a 9 to 5. Um, yeah, basically just explains that, which I like, because obviously myself, I'm a retail investor, haven't been in the market for long now, been in it for about a year and a half, not even about a year and a half, sorry, about a year and a bit, sorry. Um, I got in when, the first Rona came about, and since then I haven't looked back, made a decent amount of money in that first year, but I'd say over the last 6 months, I've really obviously learned a lot in the stock market, obviously since we've been going down in the market. I've learned a lot, and I'm sure obviously most of you guys have learned a lot if you're still in the market to today. If you've been in it for much longer than me, maybe you've been in it for 4 or 5 years, maybe 10 years plus. I don't know. Maybe you're someone that's just got into the stock market and started investing. Well, if that's the case, then I'm pretty sure that you're going to learn a lot over the next coming months, years, or whatever. Even for myself, I'm still got a lot of learning to do. But anyway, I'm going to read out a quote here, which is quite ironic because the quote itself is talking about a company that is a healthcare company. Now, if you don't know, if you haven't been watching my videos, I'm invested in a company called Hims and Hers, which is a telemedicine healthcare company, well-being company. That sells prescribed products. They also do telemedicine, um, telehealth. Sorry. So yeah. Um, so I'm gonna read out this quote anyway. So it says, "A great investor drug is one that the patient has to keep buying. Tagment was one of the latter. It provided fantastic relief from the suffering from ulcers, and the direct beneficiaries had to keep taking it again and again, making the indirect beneficiaries out of the shareholders of SmithKline Beckman, the makers of Tagment. Thanks largely to Tagment, the stock rose from $7.50 share in 1977 to $72 share at the 1987 high. These users and prescribers had a big lead on the Wall Street talent. No doubt some of the oxymorons suffered from ulcers themselves. This is an anxious business, but SmithKline must not have been included on their buy list because it was a year before the stock began to ascend. So this little quote here, guys, as you know, I'm investing in Hims and Hers, which obviously is a company that's in healthcare. They obviously sell prescribed products. They sell products, obviously, hair loss to help people that might be suffering with hair loss, prevent hair loss. They sell the product itself is called Finastride. They also sell ED products, erectile dysfunction tablets, so you can take if you're having some problems down there below. Obviously, you can use them. Um, they're obviously another thing they obviously provide is dermatology products. So maybe if you're suffering with skincare problems, sorry, acne and stuff like that, they've actually acquired a company called Apostrophe, which sells dermatology products for skincare. So and these are prescriptions. People that have these problems that might suffer with them that want to use their products will have to possibly, to use their products, they will have to be prescribed to them. They will have to use them month in, month out. Um, so it's quite a comparison to the companies talking about, which is SmithKline Beckman. Well, obviously the product is called Tagment, but the company itself was SmithKline Beckman. Yeah, obviously, it went from $7.50 share in 1977 to $72 a share in 1987, which was 10 years. So, when I talk about long-term investing, some people say 3, 4 years, 5 years. It can go up to 10 years. It can go up to 10-year plus. It really depends on the company. This doesn't just include Hims and Hers. This can be any company you're invested in. Maybe Tattoo Chef, maybe a company like Canoo that I'm invested in. I like Canoo because of the products it's looking to sell. Obviously, it hasn't got any products out right now, any cars on the road, but I like their cars they're looking to make and the design. I like the company itself, the brand. Uh, so it really shows that how much money you can make in the stock market if you do obviously invest in the right companies and have a long-term investment. Um, so yeah, on to the next bit of the quote. It says, during the testing period for the drug 1974 to 1976, the price climbed from around $4 to $7. And when the government approved Tagmet in 1977, the stock sold for $11. From there, it shot up to $72. The chart. Obviously, guys, I'm not going to read out the rest of it. Obviously, I did highlight it. If you want to pause the video and read the rest of it, you can. The next part of the video, I'm going to show you a chart from I'll just show you here right now. So this is Smith Kleinbeck Corporations. This is their stock. Started around here 1974. This is the stock chart from 1974 to 1989. On the right here we have the stock price. As you can see here, it went from $4.50, I believe, here from when he quoted, and it went all the way up to $72. And right here is the dividend annual rate growth. As it says here, it says you could have bought the stock 2 years after the FDA approved of Tagamet and still made a free bagger, which is obviously 3 times your money. So if you would have bought the stock 2 years after the FDA approved it, you would have made a free bagger of 3 times your money profit on the company if you held them the shares. So yeah, guys, obviously I've used Hims and Hers as a company to obviously describe it to you, put into maybe an understanding for you. It could literally be any company, be Canoo, Tattoo Chef, any company, long-term investing. That's the power of long-term investing. That's why Warren Buffett is at the level he's at today from long-term investing. He's obviously quoted in the past that he's made a lot of mistakes in investing, which we all do. I've made many mistakes, and I'll get to them in a minute. But like I said, Warren Buffett obviously sold Disney back in the day. He made a good profit at the time, but if he would have held them shares till today, like he has with Coca-Cola, he would be so much richer. And I've actually watched a video of him saying that he regrets actually selling that stock. But there and then he was thinking what he was thinking, and he didn't see the long-term vision, which happens. We all make mistakes. It happens. Obviously, like I said at the start of the video, you're gonna go and make mistakes. I've made mistakes, especially investing in Hims and Hers. I first got into the stock just after Cathie Wood's ARK Investor bought the stock. I bought into the hype. I did believe in the company. After they bought, I saw a video of them talking about Hims and Hers, and it's crazy how Hims and Hers came about because I actually wanted to invest in them a long time ago, before I got into the stock market, and I was always wondering how can I invest in a company like this, like I really do like the company. I like where they're going with it. And crazy enough, a couple of years later, I started investing in the stock market. And next thing you know, they're going for a SPAC. I bought at $22. Today's price is around $9.80. I still hold my shares today. I've had to average down. If you want to watch all my videos on Hims and Hers, you'll see the price averages I've had. As time's gone on, I've got it down lower. I think I got it from $22 to $16, 16 to 13 and 13 to 11, and now the price is at $9.88. I think this is the lowest it can go. I've said that in every other video, but you know um maybe if I didn't invest as much as I did there, and then maybe if I looked into the fundamentals and I saw the market cap and the valuation and thought, whoa, hold on a minute, let's compare their market cap valuation to their revenue, how much they're making. Do I think this is overvalued? Looking back now, um it was overvalued. I've learnt my lesson. I was just looking at it as a company, seeing 10 years down the line, it's going to be massive. It's going to be much more larger than what it was there and then at $22. I thought maybe it'll be much higher. I've learnt my lesson. And yeah, we make mistakes. It happens. And most people have made mistakes and made these mistakes. It happens. That's why over the last one thing I've learned over the last 4 to 5 months since we've been on this downtrend since February is about market cap valuations of company, comparing their revenue, their profitability, their earnings, and stuff like that. I've really gained knowledge on that. Before, I was just looking at the industry itself, saying, okay, this is where it's at today. Where is it going to be in 10 years? That's the first thing you should be doing when you're investing. But then you have to look into the fundamentals, looking at, okay, where's the valuation? Where's the revenue? Am I buying it now? Is it how much more can it go down? you know. And as you've seen here, if I wouldn't have averaged down and I would have walked away from the stock market, my position of Hims and Hers would have been gone. I bought at $22. It's now at $9.88 or whatever it's at. So yeah, that's one thing I've learned anyway, and it's good that I've learned that. I'm happy I haven't lost my position. I'm happy I've averaged down. I really do like the company. You know my conviction on the company. But this ain't just hims and hers, guys. I know I keep talking about hims and hers. This is to do with Canoo that I'm invested in Goev. And it doesn't matter about my conviction at the end of the day, guys. That's what I think. You might think different. You might be invested in Nvidia. I know Nvidia is a great company, but I don't understand what they do, so I'm not going to invest in them. Same with Tattoo Chef. I think Tattoo Chef is a great company. I like what they're trying to do. I know the benefits of what it does, but I haven't tried the product. I don't know, I just don't believe in it enough to invest in it. You have to believe in it. You have to be willing to hold it for 5, 10 years. And I think Tattoo Chef is going to be a massive company in the future, but I just don't have enough conviction to invest in it. And I don't have a lot of funds on the side to invest in it. I need that money. That's another thing, guys. Making sure that you have money aside to invest if your stock goes down. Because if I didn't have money to invest when my stock was going down, Tattoo Chef, not Tattoo Chef, Hims and Hers, Canoo, I wouldn't be holding my position today. I would have lost my position. I would have been sold out. I would have lost all my money. So, these things you have to take into consideration. You need to have a cash pile on the side so you can average down, getting the better prices. If you believe in the company long term, then why not? I think you really find out if you're a long term investor when the stock's going down 20, 30, 40%. That's when you really think to yourself, okay, it's going down a lot. Am I willing to invest in this when it's going down? That's when you really find out if you're a long term investor. And luckily enough, the companies I've invested in, I still believe in them. I know the risk that goes with Canoo and some of Hims and Hers, obviously. There is risk, but as it goes down, the risk is reduced. That's in my opinion, because it's getting cheaper, So that's the way you have to look at these things. I know it's hard to think like that. The best thing to do is have money on the side and don't rush into doing things. The one thing I made a mistake in Hims and Hers. I put too much money in from the get go. I should have maybe put a little bit less and then let 2 weeks go by. Think to myself, okay, am I still highly convicted on the stock? Do I still believe in it? Have I done enough research to maybe grow my conviction on it and then maybe invested more? And maybe if that was the case, I would have had more shares than what I do today. You know. Also, another thing I can say to you guys, making sure you sell when your stock has gone up way too much. Let's say your stock goes up 22% in one week for no particular reason. This happened to Hims and Hers. In fact, it went about a month ago. It went up to $15. I sold about 200 shares because I've been averaging down for so long now. I have so much money in the stock. I need to obviously reduce my risk because I'm running out of cash. So what did I do? I sold some shares. I sold 200 shares, and since it's gone to $15, it's now at $9. So I'm happy that I've done that because them 200 shares that I sold, that's allowed me to use that money to get my average down further. It probably hasn't done a lot. It hasn't got my average down a lot, but it's done something. It could have been the difference from being down 20%. You know, it could have been 40% if I didn't sell them 200 shares and average down while the stock was going down. These little things you need to make sure when you're investing in a company, if you're in a lot of money, a lot of profit, you need to think, okay, this is where I'm at today. What happens next week if the stock goes down? Am I going to have enough money to invest in other companies I'm invested in? You need to really find out if you're a long-term investor, if you're just going to do a short-term swing or long-term swing. Like company Smile Direct, for instance. I like the company. I just don't have a lot of money in the company to be doing long-term investment. I think I got a good valuation. You want to check that video out? You can. I bought it about a week ago. I'm up at the moment. Not up a lot, but I think I have about 200 shares now. Is it going to make a massive difference? Maybe not. If I had more shares, maybe it would have. But I'm going to wait for earnings. I'm going to wait to see how they're doing because their earnings over the last couple of years have been a bit inconsistent. But I mean, after everything that's happened in the last year or so, with the Rona, um, obviously that hasn't helped it. So I can let them have an excuse for that. But I want to see their earnings. I want to see where they're going from here, and then I'll make my decisions. I'm not going to make any rash decisions. I'm just going to hold it and maybe give it about a couple weeks or so, let the earnings fly by, and then see for myself where do I see myself with this investment? Do I see it long term? Do I see just selling it right here, right now? So yeah, guys, that's that. I know I've been talking, ranting a lot, and whatever, but getting off my chest. Trying to provide you guys with the much information I can to help you guys out. Maybe you guys are not invested. Maybe some of you guys have been through the same stuff that I've been through. Some of the situations I've been through that I've talked about today. Other than that, guys, you can like and subscribe. That much appreciated. Let me know, guys, if you've been through any of the situations I've been over. And yeah, thanks for watching. Much appreciated, guys. Peace.